Hey everyone, Couch Investor back to another video for today. So in today's video, we're going to discuss AMD. The stock is down 28% year to date. It's down 8% last week. Why is that? Well, that's what we're going to discuss. In this video, the main aspect of this video is obviously going to discuss the downgrade by an analyst at Barclays, but we also have an analyst at Rosenblatt who actually says that by the weakness. We're going to discuss a bit more about AMD, the growth potential of the company, especially the growth in the semiconductor industry. Because yes, if you look at it year to date, 28%, it's down. Oh no, AMD is going to fail. But if you actually look at the number, if you look at the outlook, it's far from reality. So all of that will be discussed in this video. But first, a couple of announcements. Number one, some of you know I started a second channel, not about investing, about something completely different. If you're a sports fan, if you're a gaming fan, if you're a movie fan, that channel is for you. It's called Niels Sports and Gaming, or Niels Gaming and Sports. Link will be down in the description below. Lots of fun videos, very, very different from this channel. So if you're interested in that, maybe be one of the first 100 subscribers. Link down in the description below. I'll see you there. Number two, and that's stockcard.io. 100 people are following the channel's portfolio. We're more than 20,000 on this channel, so I expect more of you to follow. It's free, so why not? The link is also down in the description below. Right now, as you can see, we are beating the S&P 500 by 3.51%. So not a lot, but quite nice. Other than that, stockcard.io is a great platform to do your research. I'm going to show you in just a bit how that's done. It's extremely easy. If you don't want to pay, you don't have to pay. But if you decide to pay and go VIP, you can use the code CouchInvestor. You get a discount at checkout. So without further ado, let's dive into this. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Now, Stock Advisor has beat the market by more than 4x. So all you have to do is go to fool.com/couchinvestor to get your free 10 stock picks now. Alright, so first up we have the downgrade. So an analyst at Barclays downgraded the stock for a couple of reasons. He cut his price target by 22% to $115. Right now, the stock is even lower than that. So from that standpoint, it might actually still be a buy. He lowered his rating also to equal weight from overweight.
Who are you calling fat?
The main reasons why he did that is because of this right here. Cyclical risk across several end markets looming in 2023. He says here, we don't have a smoking gun pointing to a correction underway in any of these markets, but it's very clear to us that all three segments, gaming, PC, and broad-based Xilinx, the acquisition, gonna touch on that just in a bit. We talked about that in the past, but I think it's nice to have a quick reminder of this acquisition. So it says that these three segments are running at elevated levels. The core issue here is what will be AMD's growth trajectory coming out of this potential correction, and the answer to this will be just how competitive Intel and ARM will be in 2024-25. They end by saying they would rather move to the sidelines until they have better clarity as to the magnitude of these corrections and what the competitive landscape will look like as Intel catches up and ARM takes more share. That was Barclays. Now, Rosenblatt analyst explains how AMD stock weakness is a buying opportunity. So the analyst Moses Mann contends that AMD is not in jeopardy of missing its 30% year-over-year sales growth target for 2022. He expects AMD to gain significant data center market share. The analyst also considers the weakness a buying opportunity and keeps a buy rating on AMD shares. Now, overall, analysts expect AMD to grow earnings at a compound annual growth rate of 30% over the next 5 years. That would put AMD's earnings per share at around $10.36 at the end of 2026. So, if we put it simply, you are basically paying about 12 times what AMD could report in earnings in 5 years. Right now, you're paying around 42 times. So if you look for the long term, it's quite nice because even this year, Analyst expects the PE to drop to around 30 as the company continues to grow. And yes, this is all available on stockyard.io. Again, yes, AMD isn't cheap, right? PE ratio of close to 42, but then again, if you're looking at 2026, it's a bit cheaper. Price to sales ratio is also expensive considering the industry standard. Now, if we look at the cards here for AMD, has high growth potential, strong operations, calm investor sentiment, and then same returns at market is neutral. The reason for is what we mentioned at the start of this video, down 8% this week, down 28% year to date. So that's how it calculates. But overall, in the last couple of years, since Lisa Su actually took over, the stock is up over 4,000%. So long-term investors know exactly what the play here is. And these are the analyst consensus. So pretty balanced between buy and hold, especially at these prices right here. The analyst price target, the average is close to 150, so representing around 35-36% upside. I hope you understand now why I like using this platform to do my research. It's extremely easy, well represented. You get the updates right here. You can follow the stock, so you get all the updates on your main board. The investment strategy is only available for VIP members, but here you get a great overview. So good for buy and hold portfolio. Yes, ticks all the boxes. Possible fit for growth portfolio. Here it's a bit neutral. Why? Well, because for growth portfolio, you usually want to have a smaller capped company. Right now it's $176 billion. So it's already big, but again, big can become bigger and successful company can keep on winning. Growth potential is there, sales growth is there, cash availability as well. Again, past investments return, that's a bit more for the short-term thinkers. And then sentiment is neutral. I like neutral, I like panic as well. So that's great. So again, if you're interested in following the channel's portfolio on stockyard.io, it's free to follow, link down in the description below. If you want to use the platform to its fullest potential, you have to go VIP, use the code CouchInvestor to get a discount at the checkout. Now, talking about acquisitions, Xilinx, all right? The acquisition is complete. Now, a little recap of what they do. So Xilinx, a leading supplier of programmable chips that help support a more connected world from data center to the edge, because we all know we need stuff to come faster and faster. Now, it's very important to note here that the market opportunity across cloud, edge computing, and intelligent devices is estimated at $135 billion. So the opportunity here is quite big. Also, Xilinx gross margins are better than AMD's current ones, so that's obviously going to help them as well. Right now, if we look at the financial outlook that AMD gave us, so for Q1 next quarter, they expect revenue to come at approximately $5 billion, give or take $100 million. Gross margin 50.5%. For the full year, gross margin will be around 51%. That's up from 48% that we saw last year and in 2020. And revenue to come in approximately $21.5 billion, representing again that growth of approximately 31% year over year. And as we've seen, the analysts expect that growth to continue for the next 5 years. Now, you might say, okay, fine, we've got some downgrade, we've got buy rating, buy the opportunity, buy the weakness. We see the outlook here. But look at the bigger picture, all right? McKinsey, big firm, they said that the global semiconductor industry is poised for a decade of growth and is projected to become a $1 trillion industry by 2030. So it doesn't really matter if you look at the short-term projections, short-term analyst price target. The industry is here to stay, obviously, but it is expected to grow and grow into a huge $1 trillion market. And also after 2030, it's not like we won't be needing any semiconductors anymore. We will need more and more semiconductors as we evolve as an economy, as a civilization, because everything is becoming digital, right? Everything besides your toothpaste, as they say, will have semiconductors in them. So any weakness? Yes, I believe semiconductors are winners, especially the big ones. Smaller ones will probably get acquired, as Intel CEO has said. The industry will consolidate and you'll see more and more acquisitions. So that will be it for this video. Let me know down in the comments below what your thoughts are on AMD, on the semiconductor industry. Have you been buying the weakness? Let me know down in the comments below. And if you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button and definitely check out the second channel. Link will be down in the description below. And as always guys, take care, stay safe, and see you all in the next video. Bye bye.